What happens when America taxes nearly everything it imports? And the man in charge of the economy says, this could backfire. Jerome Powell, chair of the Federal Reserve, has just issued a chilling warning that could change the economic course of the United States. Is a storm of inflation and stagnation brewing under Trump's new trade war? Stay with us. Welcome to TVAI, your source for smart, global news. Unfiltered and driven by facts. Today, we unravel a major economic alert that's shaking Wall Street and policy circles alike. As former President Donald Trump reignites his aggressive trade policies, the Federal Reserve is hitting the brakes with a warning. Higher prices, slower growth, and serious risks ahead. Let's dive into what's happening, and why Jerome Powell's voice matters more now than ever. Earlier this week, Donald Trump unveiled his boldest economic move since returning to the political stage. A sweeping set of tariffs on virtually all imported goods, sparing almost no country, and hitting China and the European Union with the hardest blows. Here's what he proposed: 34% tariffs on all Chinese imports, including electronics, steel, and pharmaceuticals. 20% tariffs on EU goods, such as cars, luxury products, and consumer electronics. 10% baseline tariff on all other imports, effective immediately. Exemptions? Almost none. Not even allies like Canada or Japan were spared. Trump called the move economic self-defense, claiming that global trade partners have long exploited American markets, weakened U.S. industries, and fueled national debt through trade deficits. America has been ripped off for too long, Trump said in a fiery press conference. These tariffs will restore fairness and bring jobs back to our soil. But while his supporters cheered the move as bold leadership, Wall Street and economic institutions were alarmed. None more so than the Federal Reserve. Jerome Powell, chair of the U.S. Federal Reserve, responded to the new trade policies with uncharacteristic urgency. At a press briefing the next day, Powell laid out a detailed, data-driven case against the tariffs. His core concern? Inflation. Tariffs function as taxes on imported goods, Powell explained. When applied broadly, these costs are passed down to consumers. That creates upward pressure on prices across nearly every sector of the economy. He continued, "We are not in a position to stimulate the economy with rate cuts simply to offset inflation we didn't create. Our job is price stability, and right now, these trade moves make that job significantly harder." In plain terms, Trump wants the Fed to drop interest rates to keep the economy growing. But Powell is worried that doing so will fuel inflation. This puts the White House and the Federal Reserve on a potential collision course, with billions in market capital and millions of jobs hanging in the balance. To understand Powell's warning, we have to break down the inflation equation. Tariffs lead to higher import prices, which lead to higher retail prices, which shrink consumer purchasing power. Let's say a retailer imports smartphones from Asia. With a 34% tariff slapped on the product, either the retailer absorbs the cost, cutting into profits, or they raise prices to stay afloat, meaning consumers pay more. Multiply that by thousands of products, from cars to clothing, from coffee to computers, and the effect on households becomes massive. According to the Economic Policy Institute, Trump's tariffs could increase annual household spending by $1,200 to $1,800 per year, depending on income level. Meanwhile, businesses facing rising input costs might delay hiring, cut hours, or pass along even higher costs to end users. And this happens as interest rates remain high, designed to keep inflation in check from past stimulus spending during the pandemic era. So Powell is facing a double bind. Cut interest rates as Trump demands, and risk runaway inflation. Hold rates steady, and risk slowing the economy, just as tariffs start biting. Neither choice is politically popular, but Powell has made his stance clear. The Fed will not be pressured into rate cuts if inflation data worsens. The markets didn't wait to react. Following Trump's tariff announcement and Powell's press conference, the Dow Jones Industrial Average dropped over 2,200 points in 2 days. The S&P 500 slid 4.7%, and tech-heavy Nasdaq tumbled even further. $6.4 trillion in market value was wiped out almost overnight. Investors fear two things: cost-push inflation, meaning companies lose pricing power and profitability shrinks, and consumer pullback, as families cut spending to deal with higher costs. Safe haven assets like gold and treasury bonds spiked. The dollar weakened slightly, showing global concern over America's economic direction. Even major U.S. corporations raised red flags. Walmart, General Motors, and Apple all issued cautious guidance for Q2 and Q3, citing uncertainty due to the tariffs. This drama isn't just economic. It's deeply political. Trump is betting on economic nationalism as a core theme of his 2024 campaign redux. His promise: bring jobs back, punish cheaters, put America first. But Powell isn't a political actor, and that's by design. The Fed operates independently to shield monetary policy from election year politics. Still, Trump has publicly criticized Powell, even calling him a disaster on social media. In return, Powell has avoided direct confrontation, but his messages are becoming increasingly assertive. Analysts warn that Trump might try to replace Powell or pressure the Fed board if re-elected, echoing past attempts during his first term. This raises constitutional concerns about the independence of the central bank, a key feature of American economic governance. Economists across the spectrum are now weighing in. Paul Krugman, Nobel laureate: Trump's tariffs are regressive taxes. The poor will feel them most. Mohamed El-Arian, Allianz chief economic advisor: the Fed is right to hold its line. Rate cuts would risk unanchoring inflation expectations. Claudia Sahm, former Fed economist: this is a coordinated policy failure in the making. Trade wars and tight money don't mix. Meanwhile, the IMF and World Bank have also issued early warnings, suggesting that a global slowdown could follow if U.S. tariffs trigger retaliatory moves from allies. China has already responded with 34% counter tariffs, targeting American agriculture, aviation, and automotive parts. The EU is also considering reciprocal action. As the dust settles, one thing is clear: America is entering an economic experiment with extremely high stakes. On one side, you have a political push for self-reliance and tough trade policies. On the other, a central bank focused on preventing inflation and maintaining long-term stability. Jerome Powell's warning is not just about economics. It's about balance. About avoiding the twin threats of stagflation and politicized policymaking. How this unfolds in the weeks and months ahead will shape not only markets, but the future of American households, and perhaps even the outcome of the 2024 election. Thanks for watching TVAI, where global headlines meet thoughtful analysis. If you found this breakdown insightful, don't forget to like, subscribe, and hit the bell icon so you never miss a critical update. What's your take on Powell versus Trump? Are these tariffs a bold move or a dangerous gamble? Let us know in the comments. Until next time, stay smart, stay informed.